Small cap stocks have delivered disappointing performance over the last 5 to 10 years, but are now notably cheap relative to large caps. So while large caps can often ride out volatile storms like cruise liners, small caps get tossed around a little bit like sailboats. But with the tides changing, does this create potential for small cap outperformance this year? We're going to get into that right now, right here on UBS Trending. All right, and hi everyone. Welcome to UBS Trending. I'm Anthony Pastore. Thank you for being with us today. My guest, who's back in the studio with me today, is Bill Sterling. He's the global strategist from GW&K Investments. Bill, nice to be with you today. Welcome back.
Great to see you again, Anthony.
Bill, you wrote a really interesting piece in your Global Perspectives talking about small caps and, of course, versus large caps. We're talking about the Russell 2000 versus the S&P 500. And I mentioned in my intro sailboats versus cruise liners. But
Right.
Something that you've been talking about is that small caps did underperform of late. So what was going on within that space?
Yeah, well, all the way back to 2011, you've had just a trend of underperformance of small caps versus large. And these trends tend to go in like 10-year cycles. So prior to that, it was March 1999 to about 2011, you had small caps doing very well relative to large caps. So the result now is that the valuations of small caps, because of this underperformance over more than a decade, are very attractive relative to large caps. And that, I think, spells opportunity for investors.
Right. And just for our viewers tuning in to describe, there's a sort of a threshold here. If you look at the averages, 250 million to 2 billion is the market cap of the average small cap company that might be trading in the Russell. And then large caps are anywhere from 10 billion up to 200 billion plus. So
2 trillion.
2 trillion, excuse me. Oh, that's a T.
Yeah.
Okay, yeah, sorry. I didn't mean to put the B. But small caps are a much smaller market cap versus large caps, which makes sense. But so they're cheaper now because of that underperformance. So is it the time to consider adding small caps to someone's portfolio?
Yeah, well, I think it always makes sense to have a diversified portfolio with small cap exposure. But at this point, the valuation discrepancy, there's a measure we like to look at, which is the positive PE, forward PE ratio, which weeds out the non-earners in small caps, because there are a lot of those, too, which you have to be careful about. But that measure, you're around 12 times earnings, or at least at the end of January, on the small caps, versus, I think it was closer to 19 times on the large caps. That translates into about a 35% discount of small caps versus large caps by that measure, which historically has been pretty good at predicting forward returns.
Right, and you can look at the chart that we put up on the screen there if you guys wouldn't mind bringing that back. You can see the performance between the Russell 2000, which is the small caps, then you've got the S&P 500, which is the more the large cap sector.
Right.
So you can
Today,
see.
when I looked at it, it's 13 to 20.
Right, versus when we put this chart together before we came into the studio today.
Exactly.
Right, but still the difference between the two is about the same. This is sort of a broad question, and maybe we'd have to have our viewers here talk to their individual advisor, but are small caps for everyone? Should it be in most folks' portfolios at this point?
Oh, I think it should, because over time, they've tended to deliver stronger earnings growth. Like over the last 20 years, they delivered 9% earnings growth versus, I think it was 7.7 for the S&P 500. So if the earnings growth is there and you're starting with more attractive valuations, it's from a tactical perspective, it's great. But from a long-term, just a strategic perspective, I think they always make sense to have in a portfolio.
You even put in your report that you look at 5, 10, and 20-year performance, and as the further down towards 20 years you get, the more closely tied performance is for the S&P and the Russell. When you look at 5 years, it's about almost more than double the S&P performance versus Russell. So you can see what you're describing as you're looking at 10-year cycles, how it tends to catch up after some time.
Yeah, that's exactly right.
On the small cap side, right. Well, here's another question. We talk about this with just about everybody that sits at the table where you are. We've got the Fed, and they are, of course, looking to, keep inflation down, but, they're tightening monetary policy. We probably have at least another 25 basis points in March, and then probably another in May, which is what most economists are thinking. But what happens if the Fed changes course for whatever reason? Does that affect what you might see at a performance from small caps?
Well, a lot of economists have been debating whether Chair Powell is going to end up being Paul Volcker, Jr. 2.0, or Arthur Burns. When Arthur Burns let off a little too early and let inflation get embedded. Historically, small caps have done better in higher inflation periods than large caps. And I think there's some speculation that the reason for that is that they are more nimble, more aggressive. They can raise prices more quickly. Large caps have business models that are really entrenched, and therefore they're slower to adjust. Your super tanker, or what was your cruise liner?
The cruise liner and the sailboats.
It's not as agile as the sailboat, right? Historically, I guess what I'd say is small caps may be a hedge on a higher for longer inflation scenario, which we still don't know, if we're going to have Volcker 2 or Arthur Burns 2.
Right, exactly. Yeah, there's still a little bit of time left to see. I mean, with jobs where they are, but wage pressures coming down a little bit, I mean, it's very interesting. The Fed has certainly a difficult job ahead for the next 8 to 10 to 12 months as we look towards 2024.
It has been the case that small cap earnings fall more. They're more volatile during recession periods, like the two most recent ones, the tech wreck bust and then COVID recession, the global financial crisis.
Back in 2008 and 9.
Yeah, but they tend to go down more, but they come up more rapidly as well. One corny analogy I saw is, it's like your cruise line, but think of airliner. Like large caps are like the Airbus or Boeing 747, and small caps can be more like the F-16. So the Airbus or Boeing take a long time to get down the runway. They gradually increase, then they go up. The F-16's like this. So in most market recoveries, small caps have really zoomed.
Right.
Going back to 1930, for example, in the first 6 months of recovery, and typically they occur in the same month. The S&P 500 recovers in the same month that the small caps do. But you've been up typically 40% in the first 6 months of recovery for small caps versus 25 on average for the S&P. And 12 months in, it's 64% for small caps versus 33% for the S&P. So big difference there, and lots of alpha for people who own small caps, in those recovery periods.
So you're looking historically, obviously, as you're talking about, and when we were talking right before the show began, you said, a lot of economic historians go all the way back to the 1930s and look at data. So there's a lot of precedent set for what we see right now at this precipice for outperformance for small caps, given what we've seen in recent decades.
Yeah, and as your earlier question about where are we, is a recession ahead of us, or is this a bear market rally? And we don't know that for sure yet. But what we do know is that in 90% of those recoveries that have occurred since the 1930s, you've had the hit rate for small caps outperforming large has been 90%.
Incredible.
Yeah.
Yeah, I mean, clearly there's precedent here. But the Russell still seems to be trading about 20 times earning, which is not necessarily cheap, when you look at historical standards.
If you strip out the non-earners, though, that's where you get the current 13 times earnings. And that's what's used in some asset allocation models that I've seen, which, one by one of your competitors who will remain nameless, suggested that could imply a 5 percentage point sort of advantage of small caps over large caps over the next decade, just on a sort of standard regression model, looking at starting valuations. 'Cause starting valuations matter a lot. We never know exactly what the future will hold, but we do know what starting valuations are.
That's right.
Right now.
And as you said, we don't necessarily know what the rest of the year looks like. Some economists think we might be in a recession already. Some think there was one's coming, and some think may not even have one at all. So there's a lot of opinions out there. So given where we are now, this seems to be a good spot to be putting money to work.
Yeah, I would say, though, the valuations you're seeing right now indicate that small caps may have already discounted a pretty severe recession. That's precisely why they are so cheap.
There we go.
So if you get the soft landing, or even the no landing, then they've over discounted the bad news.
There you go. So you're not in terrible shape if that happens.
Right.
Good. Bill, thank you very much. Always a great conversation. Please come back. Love having you here at the table.
Thank you, Anthony.
Good to see you, Bill. Bill Sterling
Appreciate
again from GW&K Investments. And for more information on anything we talked about today, plus lots of other great content from our Chief Investment Office, visit our website at ubs.com/views. Plus, you can check out all of our social media platforms, LinkedIn, Facebook, Instagram, or Twitter, for all of our other content coming out of UBS. And all of our past UBS Trending episodes are available for you as well on demand. And if you do have any questions about your portfolio, make sure to speak with a financial advisor. Lots of conversation today with Bill, so there may be some opportunities there for you, but make sure to talk to that FA for yourself. Until next time, I'm Anthony Pastore. Have a great rest of your day, everybody. Remember to keep your eyes on what's trending. We'll see you soon.